Hey there watching. Today I will be speaking to you about the structure. Now by the structure I mean the structure of a business. The structure of a business simply means all of the elements that comprise of the formation of that business, and this is dependent on a number of factors. We could consider the size of the business, the industry, the particular vision, and the legal requirements to achieve that vision. So when structuring your business, please do not be in a hurry. Make sure you carry out every due diligence needed and understand what it takes to get that vision you have set out. Now, after understanding the vision and the purpose of the business, you need to understand that there are general rules, there are general yardsticks for putting together a business, for creating the structure of a business. And this has been explained in depth in my first book titled The Industry Minor, A to Z of Business Construction. But right now, I will just scratch the surface so you understand the flow and get where we are headed. Now, these steps include conducting a market research, drafting a business plan, choosing a legal structure, securing financing, building what I would rather call a billion-dollar team. The billion-dollar team. The billion-dollar team can change the entire game for you. Now, after building the billion-dollar team, the next step is to launch and operate, advertise the business, and think of different ways to grow and expand the business. Now, when starting a business, it is important for you to gather every single information possible about the industry you're trying to venture into. Now, that business you're trying to start, there is an industry that governs it. There are acceptable practices. There are fixed prices that cannot be exceeded or gone below. Because you see some people start a business, let's say this pen for instance, the acceptable market price is between 100 naira and 120 naira. There's some people that just come from nowhere and sell for 50 naira, taking every other person out of the business, or decide to sell for 500 naira, exceeding what the acceptable practice is on this pen. So you need to gather every information. You need to ask questions, know what the competition is like, know what the acceptable products are like, know what the demanded products are or services, know every single information that governs the legal requirements, legal implications of certain actions, the trade unions, every single industry trend and industry information. So you must conduct a market research. You must be informed, you must be aware, you must be in the know of everything that governs that market you're trying to venture into in that industry. Now, there are different ways through which a market research can be conducted, but for the purpose of this conversation, we have broken it down into various steps. Now, these steps include the research method, the target market identification, the acceptable products and prices, competitive analysis, and drawing a conclusion and recommendations through which you can shape in your opinions and your decisions. Now, when it comes to research methods, there are different effective methods through which you can conduct a market research. Now, each of these methods will give you the required answers, but a combination of all these methods will give you more answers than you could ever ask for. So I would always advise that you combine, don't just rely on one. Don't just rely on one method and say, okay, I've gotten all the information I need. Use a combination of multiples. Get everything, be in the know. Get every single information possible about the market you're trying to venture into. Now, these methods include market survey, interviews, observations, secondary research, focus groups, and online analysis. Now, market surveys are the most commonly used methods. What are market surveys? Just simply drawing up questionnaires, mostly online, and breaking down the questions into different segments and offering them to different people, mostly online, making them answer questions relating to that industry. So that's literally what a market survey is. The next one is interviews. Now, interviews can be structured or unstructured. Structured interviews just simply means drawing out a number of questionnaires, and approaching different people to answer those questions for you, and asking specific questions that will get you specific answers. But unstructured interviews just means engaging in conversations to draw out information. So there's no specific question, you're not expecting any specific answer. You're just trying to get trying to get discussions through which you draw out your conclusions one after the other and make sense out of everything that has been said, depending on what you need. Now, the third one is observations. This just means observing people, observing businesses, customers, competitors in their natural state. So there could be a certain competitor, who inspires you or who does things differently, and then you just observe how the person does business, how the person advertises, choice of words, the number of staffs they have, just observing competitors and the market in the natural state. That's what observation is about. Now, the next one is secondary research. Secondary research is just drawing information, gathering data together from already existing materials. So there could be journals, there could be a library that is industry specific, that has every information, books that have been written from authors in that industry, or just different materials, articles about an industry. So secondary research is just drawing and gathering information, data about the industry from those available materials. Then we move to focus groups. Now, focus groups are small gatherings, small industry specific gatherings, people who are in an industry, who are, for instance, an association. So joining an association, meeting people, asking them questions about the industry that is associated with that association, and just getting their opinion, getting what they know, what they have realized over time. And the last one is online analytics. This is very easy to use. It's just simply you gathering information from websites, from social media platforms, economic media platforms. For instance, if you want to stock the Aisha Ochuwa brand, just go to the website, see where products are arranged, how products are taken, how we number the products, pricing. So that's you gathering information from the website. Or you could check social media platforms, go to our page, check the number of followers, check how we post, how we sponsor adverts. That is you also gathering information. These are all research mechanisms, and there are ways to get information about a business. Now, after sorting out the research methods, the very next thing to do is to sort out the target market identification. Simply put, knowing the people to reach out to, or the people who will be interested in your products and services. You need to know the audience you are trying to target, because creating products, there are people who will be interested in those products or services. So you need to know who those people are and how to reach them. My go-to example is the jewelry market. For instance, there are customers, there are specific customers for the stainless steel market, and there are customers for the luxury market. So target market identification is knowing how to differentiate and distinguish between them and reach them, knowing the marketing, the marketing tactics that will be appealing to each group. Your focus is the people that are interested in your business, right? So you need to know how to get to them, how to reach them, how to attract them and make them patronize your business. So that is target market identification. Now, after identifying your target audience, the very next step is for you to know the acceptable products and prices applicable to them. You don't just go, I mentioned this earlier, you don't just go into an industry, into a market and just do what you want. You'll create enemies. And trust me, we only want rooms for collaboration and partnership. We don't want enmity and unnecessary negative competition. So understand the market trends, understand what is applicable and acceptable in the market. Go with the flow. If at all you want to reduce your prices for more, inflow, don't let it be drastic. Let it be reasonable. If you want to increase your prices for to distinguish your products, or you think you have put in some more extra effort and you think your reward will be to get some more profit, then don't allow the margin be too much. Let it still be reasonable. Let it still be within the range, the acceptable range. So ask questions, understand this, know what the acceptable products are, the products that are on high demand, the products that are not even accepted in the market. For instance, the jewelry industry, there are certain kind of metals that should not even be used to produce jewelry. No matter how beautiful the design is, don't use those metals, because by the time they are exposed to sunlight, they go bad immediately. So understand what the acceptable products and practices are and the acceptable prices for those products. That is the next step. So once you are done with that, you move on to competitive analysis. What is competitive analysis? It means stalking your competitors. Yeah, it's allowed. It's allowed. You can stalk them. Understand their strengths and their weaknesses. Know where they have created a lacuna, right? Know where they have created a gap and capitalize on it. It's business. It's business. So, competitive analysis. Understand your competitors. Know who the key players are in your industry and study them. Understand what took them to that point that made you recognize them as a key player. Understand their marketing strategies, their pricing methods, their customer service strengths, what they do that makes customers come to them. Understand that and use it to your advantage. Understand their strengths, understand their products, study their products. What are the components of their products that make their products so good? Understand it. That is competitive analysis. Analyze your competitors. Once you have done that, then you move to drawing your conclusions and your recommendations. Draw your conclusions, a combination of every information you have gathered and all the steps you have taken. Put them together, understand them, study them, and use them to your advantage. That is you drawing your conclusions and recommendations. Look for steps on how to implement them. It's one thing for you to have information, it's another thing for you to put the information to use. So that's you drawing your conclusions and recommending ways and strategies through which you can implement the information you have gathered. Now, moving on, remember we're breaking down steps to take, to create that perfect structure, business structure, and we mentioned conducting a market research. Now, once you have conducted your market research with all the methods we have listed, the very next appropriate step will be for you to create a business plan. Now, a business plan can be considered a user manual to achieving your dreams and visions. It's just you putting your dreams and visions down on paper and writing just everything you will need to structure the business. That's literally what a business plan is. So the very next step will be for you to write down the business plan with all the information you have gathered during your market research. Use them to shaping your vision and shaping your plans and your modes of achieving the vision. That's literally what the business plan is. Now, there are different components of a perfect business plan, and this includes the executive summary, the company description, product and services, market analysis, marketing and sales strategies, operations and management, financial projections, and risk assessments. These are all the components of a perfect business plan. You have to list all of them, draft all of them. They will help you, they'll serve as a guideline for you achieving your visions. But let me just scratch the surface on each of them and just make you understand what they really are. Now, an executive summary is simply an overview of the business plan. So every single thing you intend to draft and you intend to draft in details. An executive summary is just you summarizing, literally. It's just you touching each point, just bit by bit, giving the reader something, a compelling force to want to read everything. So that's your executive summary. Now, immediately after the executive summary, the very next thing is the company description. So it's just you talking about the company and just telling the reader every single thing you need to know about the company. So once you have written that, the very next thing for you to write is, a breakdown of the products and services the company offers. For instance, if your company is one that offers a number of services or a number of products, this is where you break each of them down so that the reader understands every single service and every single product the company offers at the moment. Once you have done that, you move to the market analysis. This is where you now apply all the information you have gathered. All the information you gathered during your market research, this is where you put them down on paper. It's for you to analyze every information you've gathered about the market. You know everything you know about the market, literally. Once you have written down the market analysis, then you move to your marketing and sales strategies. You understand the market. That's the market analysis. So now, how do you intend to break into the market? It's one thing to understand the market. It's another thing to know the method to captivate and capture the market. So what are your marketing strengths? What are your marketing strategies? How do you intend to market? How do you intend to get to your target audience? How do you intend to attract and keep them? That's where you break down all of those. Now, the very next step is for you to list out the operations and management, just the personnel, staffs, employers, employees, just those information about, the people that make up the team governing the business. That's just what this part is about. And listing out your daily operations, how every member of the team carries out their daily activities. That's what the operations and management section is about. Once that is done, you move on to financial projections. This is you just giving an overview of what your revenues, expenses, and profits are and will be over a period of time, usually 2 to 5 years. The last step, not the least, is risk management. Having understood all of these, having assessed everything about the business, the market, the industry, what are the risks you fear? What are the things you think may come up, and how do you intend to curtail them? This is where you list out all the potential risks and how to manage them. So these are all the components that make up a business plan. Business plans are necessary. Business plans are useful. Financial institutions will ask for your business plan. You cannot just, if you're an existing business, even if you want to drop a collateral, you go as a business, they'll still want to know your business plan. If you're seeking investors, they want to see your business plan. So it's important for you to have a business plan as a business owner. Make sure you draft it. Take out time, draft it. It will come in handy for you and your business. Now, after sorting out your business plan, the next appropriate step will be for you to pick the right legal structure. Legal structures could be divided into sole proprietorship, partnership, and companies. What's a sole proprietorship? Simply put, one-man business. If you intend to just start a business where you can just make quick profit and you don't even intend for it to go from generation to generation, you're just trying to make ends meet, just trying to do something, you don't really care, then go for a sole proprietorship, one-man business, because a sole proprietorship does not have perpetual succession, right? It dies when the business owner dies. The business owner can just use personal savings and just fund the business. If you are the lazy type and just want to do a business, then sole proprietorship is your best bet. Now, if you don't want to do the business alone because you want, a partner or partners who can come together to pull resources together, expertise together, time, decision making, sharing of profit, sharing of risks, sharing of management, everything, then you should go for a partnership. But if you want a going concern, you want something that has a separate legal personality, you want something that can go from generation to generation, you want a solid legal structure, then you should incorporate the company. Now, a company is a legal structure that has a separate legal personality from the directors, the shareholders, the management, the owners of the company, literally. So a company can buy properties, a company can enter into contracts, a company can sue and be sued, and a company can be either public or private. A company being either public or private can be limited by shares, limited by guarantee, or unlimited. So it's best for you to get a legal advisor who would break down the legal implications of all of these legal structures so you understand in depth and have enough information to make the right decision. Once you have sorted out the legal structures, the next appropriate step will be for you to secure financing. Now, financing is an important part of running a business, not just starting a business, of running a business, because you need money to make money. You have to spend money to make money. How do you spend money? Paying on salaries, rents for your business outlet, or even buying the business outlet. You may need vehicles, you may need dispatch buyers, you may need different, even advertising. You need money. So there must be a constant flow of cash into your business, not just out of the business. So now, how do you secure financing? For the purpose of this conversation, we will be breaking down financing into primary and secondary sources. Let's start with the primary sources. Now, primary sources are the general sources considered when trying to secure finances for a business. These are mostly used by people who just want to start a business from scratch. So they think, they have their business plan in front of them. They're thinking, how do I get money? The first steps that come to their mind, these are primary sources. We're talking about personal savings. We're talking about getting money from family and friends. We're talking about small loans from financial institutions. We're talking about crowdfunding platforms. We're talking about associations that give grants. These are primary sources. Yes, these are means to get money, but there are other means to get money to finance a business. These are the secondary sources. Now, secondary sources are mostly used by already existing businesses. Now, they're already running, they're operational, but they need more money to finance the business. Secondary sources are their options, their go-to options. Now, these include equity financing, cash flow optimization, customer base expansion, venturing, and diversification. Let's scratch the surface on these. Now, what is equity financing? This simply means selling a part of the company by way of shares, stocks, bonds to investors. Investors could mean angel investors or venture capital firms, right? To investors for equity. So you're giving them a part of the company. They own a part of the company, but they give you money to finance the company in return. For instance, you give me a detailed business plan. I like the business plan. I'm interested in owning a part of your company. I tell you, what will it take for me to own 30% of your company and you keep 70%? And you tell me, you know what, I need the money. I don't mind you owning a part of the company. You want 30%. How about you pay 70 million to own 30%? Now, how it's done is whatever profit that comes to the company, the money or the profit is shared at that ratio, 30-70, right? So it means I have bought off 30% of that company. I own 30% of the profits. I will also share in the losses depending on the arrangements, the agreements we have. So that's simply what equity financing is about. So apart from selling a part of the company to investors, you can also get a partner who will share in the profits and share in the losses, share in the decision making, share in everything that has to do with the company. So the very next one is cash flow optimization. It's very simple. It just means you implementing different ways, coming up with different ways to reduce costs, right, and increase profitability. So different ways to make money. One of the ways through which a business can increase profitability is to reduce costs. By the time you checkmate your expenses, be more prudent. Negotiate terms and rates with suppliers. Scrutinize where money goes to. There's some things that businesses spend money on that can be avoided. That is what cash flow optimization is about. Regulate how money goes out of the company and try to increase the avenues through which money comes into the company. Once you have this in check, the next step to increase finances of a business is to expand the customer base, reach out to more people, constantly reach out to more people. Everybody on the road is holding your money. Look for a way to get your money from them. How do you get your money from them? By making them aware of your company, introducing your goods and services to them, bringing them to your side, and helping to inform their decision to patronize you. That's how you increase your customer base. So advertise. You cannot do without advertising. You have to market your products. If you do not offer your services to the public, if you do not market your products and services, they will not be aware. So why not advertise? Once you advertise, they patronize, more money comes into the business, more profit is generated. So expand the customer base. Once you expand the customer base, the very next way or another way through which a company can get finances is to venture and diversify. Grow. You have to venture. You have to diversify. You have to touch every aspect of that market, every aspect of the industry. You have to touch it. If you are into the sale of jewelry, I keep going to the jewelry business because I am well informed about the jewelry business and I understand all the intricacies of it, right? So the jewelry business, the jewelry industry has different markets. Touch every market. Bracelets, rings, anklets. Don't just say I sell only bracelets. Sell rings too, sell anklets, sell weight chains, sell everything, sell children's sets, sell adult sets, sell everything sellable. That's where you increase profitability. That's where money will come into the business. Expand your horizons. Diversify. There are different people want different things. There are people who want bracelets and do not want anklets. There are people who want stainless steel and do not want luxury. There are people who don't mind stainless steel and luxury. But there are people who can only deal with luxury and cannot deal with stainless steel. So diversify. Touch every area so that everybody that comes to you gets something from you, has something to do with your company. Don't give a room for people to say, oh, I don't have any business with that company because they just sell stainless steel jewelry and I think I'm bigger than that. I think I can afford luxury jewelry. Offer stainless steel and still offer luxury so that you expand your borders and you get more profit into the business. So the next step on the list of structuring a business is putting together that billion-dollar team. The billion-dollar team. You need to be very selective when it comes to picking your team members. Don't just pick people based on nepotism and the who formula, or I know you formula, or your mother's friend is my auntie. Don't bring that into your business. So you have to be very critical when putting together your team. You have to put together that team that will help you actualize that dream you have for your company. So make sure when picking your team, you focus on expertise, you focus on experience, you focus on dedication, you focus on productivity. When they submit the CV, make sure you carry out your due diligence and ask questions. If the person says, I am 24 years with 22 years working experience, investigate the 22 years, understand it, make it make sense, connect the dots. You have to critically assess every member of your team, everybody that comes to you for employment before you make them members of your team. So put together a billion-dollar team based on expertise, based on experience, based on qualifications, based on dedication and determination to work. You also need to consider them buying your vision. You cannot just employ because you're just trying to fill that role. If the person doesn't buy the vision, the person has no business being a member of your team. So this is one critical area. So the person needs to align. The person needs to buy the vision. Once the person doesn't buy the vision, not for employment, once the person buys the vision, that is the first step. Then every other thing will align. So after putting together your billion-dollar team, the very next thing is for you to constantly advertise the business. We already talked about advertisement. So make use of all the platforms to advertise. Make sure you reach as many people as you can daily. Be your own walking billboard. Market your brand. Be proud of the brand. So you have to show that confidence. You have to constantly market your products, advertise, reach a new audience, reach new customers. Make use of all the social and economic media platforms to reach new people. There are so many people in this world. So why limit yourself to just a very tiny fraction of all the plenty people in this world when you can as well reach as much people as you can when you constantly advertise? So make sure you push out your brand, push your brand out there, and make sure your brand gets to as many people as you can. Now, a lot of business owners make one common mistake. Once they have the perfect structure, or the structure they consider perfect, a structure that can work without them being physically present, they just put the structure in place and hand over the business to employees and tell the employees to run using that model that they have set out. It's good to have a good structure, but make sure you're also present, physically present. There's something it does to the human mind. It keeps the human mind at alert. No matter how beautiful your structure is, if you are not present, if your workers do not feel your presence, they will be too relaxed and they may take the business for granted. So don't just set up a business, put people in charge and travel around the world, or think it's time to sleep and just relax for inflow to come in. Inflow may come in, you may get the desired profit, but it's only a matter of time before you see the repercussions of that your extra relaxation. So when you set up that perfect structure, make effort to be present, physically present, structurally present, operationally present. Don't just set up the structure and just go MIA, go missing in action. Make sure you're also there to monitor the finances, monitor the activities, monitor operations, monitor the customer respect and customer base, and every single activity about your business. To conclude this video, let's talk about constant growth and expansion. You must understand that trends change, markets grow, people have changes in their taste, their wants, their likes. So you must constantly, monitor the market trends and what is acceptable. You must understand your customers, and when your customer base expands, you must be able to diversify to accommodate everyone. Constantly seek ways to grow your business. There are so many ways to grow the business. Sit, analyze the ones that work for you, implement them. Look for ways to capitalize on them and make them even better. Monitor your competitors. Just look at the market and look at all the opportunities that are available to you. But make sure in everything you do, you constantly think of growth. You constantly think of expansion. You constantly think of attaining the greatest heights, becoming the industry giant, topping all the people that are already topping the charts at the moment. Make sure you constantly seek ways to grow. you must grow. You must constantly grow your business. That is the only way to become the best you can in that industry, and that is the only way to truly achieve all your visions and make all your dreams come to life.
Aisha.